All right, ready to dive in. We're tackling Utkarsh Small Finance Bank's second quarter results for fiscal year 2025.
You know, the stuff that really matters.
You bet. You've given us a ton press releases, the auditor's report, even their investor presentation.
Someone's looking for the inside scoop.
That's right. Want to know if this bank's a hidden gem or a potential headache?
Well, we're about to find out.
Yeah, exactly. We're going beyond the headlines, breaking down those numbers.
And what's really interesting,
Yeah.
Utkarsh went public not too long ago, July 2023.
Oh, right.
So these reports aren't just about the last quarter.
What do you mean?
They give us a glimpse into how this brand new publicly traded company is actually doing.
Makes sense. Everyone's watching them now.
Exactly. It's like peeking behind the curtain.
All right, so first things first, they just released their audited financials for Q2.
Ending September 30th, 2024.
And right away, something stands out, an unmodified opinion from those auditors, Deloitte and Curtain and Pandit.
Huge.
I know, right? It sounds technical, but...
Yeah. It's a big deal for any potential investor.
Absolutely. So what does it actually mean?
Basically, the auditors are saying, we've checked the books, everything looks good.
So we can trust the numbers.
Exactly. It's like that feeling when the restaurant you're about to eat at has that A rating from the health inspector.
You know you're in good hands.
Oh!
Okay, let's dig into those key figures then.
The main course.
For Q2 of fiscal year 2025, Utkarsh's net profit was, drumroll, over 513 crore rupees.
Massive.
Huge jump from the previous quarter, ending June 30th.
Back then, it was about 13 crore.
And get this, compared to the same time last year, September 30th, 2023,
Well, yeah.
their profit was just under 11 crore rupees.
Scaling up fast.
Now, beyond profit, there are other numbers to watch. First up, the capital adequacy ratio.
CAR.
Right, CRR. It's sitting pretty at 22.4%.
Way above what regulators require.
What does that mean for us, though?
Think of CAR as the bank's safety net.
Okay.
Higher CAR means they're better prepared if things go wrong.
Oh, I see.
Less risk for investors.
Like a big emergency fund.
Exactly. The bigger, the better. Then we've got earnings per share.
Basic and diluted.
Yep, both came in at 1.72 rupees for the quarter.
Up from 1.25 the previous quarter.
And why should you care?
Fill me in.
Higher earnings per share means more profit for each share of stock.
Ah, so potentially bigger returns for shareholders.
Down the line, yeah. Now, it's not all sunshine and rainbows, though.
Uh-oh, what's the catch?
I got to look at those NPA ratios.
NPA.
Non-performing assets.
Right. Remind me what those are again.
Those are the loans that have gone bad.
Oh, right, like when you lend money to a friend.
And they never pay you back.
Exactly. Not good.
So Utkarsh's gross NPA is 3.88%. The net NPA is 0.89%. Still within acceptable limits, but they've inched up a bit compared to last quarter and last year.
Could be trouble.
Possibly. Could be a sign of stress, especially with their microfinance loans.
Okay, so big picture, good profit growth, strong financials, BUT.
Keep an eye on those NPAs.
All right. Now, where's all this revenue growth coming from?
Let's break it down. Most comes from interest earned on loans.
Okay.
Then income from investments and other smaller sources.
Gotcha. Anything stand out?
Their interest income grew a lot year over year.
So they're lending more.
Yep. Fits with their expansion strategy, but...
There's that but again.
It means more risk, which brings us back to those NPAs.
True, true. Are they at least spending wisely as they grow?
Well, their operating expenses went up.
Uh-oh.
But not at a proportion to their revenue.
So they're not blowing it all on fancy stuff?
Not yet, at least. It means they're managing costs well.
Which was good for profits.
Yeah.
Okay, back to those NPAs.
It's a big question mark.
It's a big deal for A&I Bank, right?
Absolutely. Imagine you're a bank lending out tons of money.
Okay.
And some borrowers just stop paying.
Ouch.
Those are your NPAs, and they can really hurt a bank.
Gotcha. So how's Utkarsh dealing with this, especially with all that microfinance?
Well, they've set aside a good chunk of change. For potential losses, it's called provisions.
Right, provisions.
And here's the interesting part.
Hit me.
They've actually put aside more than required.
Why would they do that?
It's called a floating provision, an extra layer of protection.
Like a backup parachute.
Exactly, just in case things get really rough.
So, being extra cautious, but does that mean they're worried about their own loans?
Oh, it's tough to say. It shows they know the risks.
Yeah.
But it also shows they're taking steps to protect themselves and their investors.
It's a balancing act.
Exactly. They're being prudent.
Okay. Let's circle back to that capital adequacy ratio.
That safety net.
It was at a comfy 22.4%, well above the minimum.
Remember that emergency fund analogy?
The bigger the better.
The car is like that. Higher car R, better equipped to handle problems.
Got it.
And Utkarsh's car R means they can absorb losses without major damage.
They're playing it safe.
In a way, yeah. And they haven't been just sitting around either.
What have they been doing?
They recently issued debentures.
Debentures.
It's a type of debt, which boosted their Tier 2 capital.
More cushioning?
Another layer, yes.
Yeah.
More room to grow without overstretching.
Smart move.
Yeah.
Now, what about their strategies? I noticed the board approved a revamped ESOP plan.
Adding a huge number of options.
Yeah, 55 million. What's the point of that?
ESOPs are employee stock ownership plans.
Right. I know the acronym, but...
It's a way to motivate employees by giving them ownership.
So Utkarsh is trying to attract and keep talent.
Exactly. Especially with how fast they're growing.
Like it's saying, join us, be part of our success.
You got it. And there's another benefit to ESOPs.
Oh.
It aligns employee interests with shareholders.
How so?
When employees have skin in the game, they care more about the company doing well.
Makes sense. It's a win-win.
For everyone. Okay, now let's talk expansion. Utkarsh is being pretty aggressive, right?
Yeah, both geographically and in what they offer.
Definitely not playing it safe. They're working on growing their deposit base.
Focusing on what exactly?
CADIS, current account savings account.
Yeah.
Retail deposits. These are generally cheaper for banks than term deposits.
Helps with costs.
You got it. And they're not sticking to their usual areas either.
They're branching out.
Big time. Trying to crack the top 100 cities in India.
Bold move.
It could give them a much bigger customer base.
Right.
Offer loans beyond just microfinance, diversify their portfolio.
Don't put all your eggs in one basket,
Yeah.
right? But with all this expansion,
There's always a risk.
how are they making sure they don't overextend? What could go wrong?
The million-dollar question. Rapid growth is tricky.
In what way?
It can lead to operational issues and more risk.
Right.
Utkarsh needs to be careful, make sure they have the right systems in place.
Infrastructure, risk management, all that.
To stay financially healthy, exactly.
It's a tightrope walk. Grow fast, but keep things under control. Now, their digital strategy. Utkarsh seems to be all in on tech.
Their investor presentation is packed with it.
Yeah. Mobile and internet banking, data analytics, even robotic process automation.
They're embracing the digital age, for sure.
It's about offering better customer experiences, right?
And streamlining those operations, boosting profitability, too.
Trying to blend that local bank feel with the convenience of tech.
It's a good mix. But are they actually doing it or just talking?
That's what I'm wondering.
Their presentation has some concrete examples.
Oh, like what?
Digitizing onboarding, so opening an account is easy. Video KYC, so you can verify your identity remotely.
Nice.
And they're even automating internal tasks.
With robots.
Not actual robots, but close. Robotic process automation.
So like digital assistants doing the boring stuff.
Exactly. Freeing up employees to focus on more important things.
Sounds sufficient. Okay, before we wrap up this part, one more strategic move they're planning to merge with their holding company.
Utkarsh Core Invest Limited.
Right. Can you explain this?
Sure. It's a way to simplify their corporate structure, potentially unlocking some synergies and efficiencies.
Sounds good.
But mergers are always tricky.
In what way?
Integrating teams, navigating regulations.
Challenges.
Definitely something to keep an eye on.
All right. So far, we've seen strong profit growth, a little blip with those MPAs, cautious risk management, those aggressive expansion plans, and a full-blown digital transformation.
They're definitely on the move.
That's for sure. But before we jump to conclusions,
we need to hear from the people in charge.
What are the management and those industry analysts saying?
Are they optimistic?
Or are there warning signs?
We'll find out in part 2.
Stay tuned. Back for more Utkarsh action. We've crunched those numbers, but numbers only tell part of the story.
Right. Time to go beyond the spreadsheets.
Get the human perspective. What are those running the show saying about the bank's performance?
And how does that line up with what those industry analysts are predicting?
Separating hype from reality.
Exactly. First, we look at the management's take. Then, we see if those sharp-eyed analysts are waving any red flags.
Or cheering them on.
Could be either. So, let's start with those at the helm.
The people calling the shots.
What are they saying about Utkarsh's performance? Any hints about their plans for the future?
Lay it on us.
Well, we can piece things together from their presentations, press releases, earnings calls.
Yeah.
One thing that's clear,
that
they're being upfront about the challenges in microfinance.
No sugarcoating?
Not really. They acknowledge those issues, higher borrower debt, those worrying collection rates.
Refreshing honesty.
Right. But it's one thing to recognize a problem, another to actually fix it.
What's their plan to tackle these microfinance headwinds?
A few things. One strategy is shifting towards secured loans.
Secured.
Instead of just lending based on someone's promise to repay,
Yeah,
they're asking for collateral, like property or vehicles.
makes sense. Less risk if things go south.
Exactly, like an insurance policy on those loans.
Smart. Anything else?
They're tapping into their existing customers.
Those who've already taken microloans.
Many of them haven't had access to traditional banking.
I see.
So Utkarsh is realizing these folks might need more than just a small loan.
What else could they need?
Maybe individual loans.
Okay.
Maybe help with affordable housing.
Building deeper relationships.
Exactly.
Yeah.
Not just one-time transactions.
So it's like they're saying, hey, we helped you with those microloans.
Now let's tackle those bigger goals together.
Makes sense. How does this tie into their city expansion plans?
Well, those new urban customers might start small.
With a simple loan.
Right. But they might eventually need more complex financial products.
I see.
That's where Utkarsh steps in, offering a wider range of services.
Okay.
This helps them grow their deposit base, too.
Which they need for lending.
Exactly. It's all connected.
It's a win-win. Attract new city clients while building on existing relationships. What about their digital strategy? How does that fit in?
Digital is a big part of their story.
Yeah, we saw all those initiatives.
They're really betting on technology to improve that customer experience.
And make things more efficient, right?
Right. Think mobile banking, fast loan approvals, personalized insights.
The bank of the future.
Yeah.
But are they walking the walk?
Their investor presentation has some concrete examples.
Like what?
They've digitized their onboarding.
Meaning?
Opening an account is super easy now.
Okay.
They're using video KYC.
Video KYC.
So you can verify your identity from anywhere.
Cool.
And they're even automating those internal tasks.
With robots.
Not exactly robots.
What then?
Robotic process automation.
So like digital assistants.
Exactly. Handling the boring stuff, freeing up their staff.
Makes it efficient.
Exactly.
Okay. No business is perfect though, right?
Right.
What roadblocks might Utkarsh hit?
Well, the microfinance sector is still struggling.
We talk about those headwinds.
Borrower debt, collection rates, those aren't disappearing overnight.
Even if Utkarsh is being cautious.
There's always a chance things could worsen.
It's like sailing through a storm.
You got it. You can do everything right, but the weather can still change.
What else is on the radar?
Competition. The small finance bank space is getting crowded.
Lots of players.
Utkarsh needs to stand out.
Offer something unique.
Something valuable to attract and keep those customers.
That special something. Anything else?
Their expansion, while exciting,
Yeah.
it could be their downfall too.
How so?
Growing too fast can be risky. Resources get stretched thin, operational headaches.
They need to manage it carefully.
Don't bite off more than they can chew.
It's that balance, growth versus stability.
Exactly.
Okay, time for those expert opinions. What are analysts saying about Utkarsh?
This is where things get interesting. It's a mixed bag.
Oh.
Some are praising Utkarsh.
Oh.
Others are more cautious.
Let's start with the good news. What are the optimists excited about?
Some analysts see Utkarsh as a real player in this space.
Small finance banks.
Exactly. They point to that impressive growth.
Which we've seen.
The solid financials.
Those two.
And those smart strategic moves.
They like what they're seeing.
They believe Utkarsh has the potential to go far.
Some thumbs up from the experts.
Yeah.
But what about the doubters? What's making them hesitate?
Those naysayers, they're worried about the microfinance exposure.
Those headwinds?
Exactly. They're concerned if those rising NPAs could hurt profitability.
Even with the steps Utkarsh is taking.
It's a real concern for them.
Understandable. Anything else they're chewing on?
Some are wary of those ambitious expansion plans.
Growing too fast.
Right. They think Utkarsh needs to be careful and make sure they don't overreach.
Sometimes slow and steady wins the race.
Exactly.
So it sounds like Utkarsh's future hinges on their ability to navigate all this.
They've got their work cut out for them.
What does it all mean for our listeners?
If you're thinking about investing,
Yeah.
this deep dive has given you the information you need.
The good, the bad, the uncertain.
You can now decide if Utkarsh matches your goals and your risk tolerance.
And even if you're not buying stock, this analysis gives you a peek inside small finance banks.
The challenges they face.
Their strategies.
And what makes them succeed.
It's a glimpse into a sector that affects so many.
Especially those who rely on these services.
Absolutely. Now, for that big question,
The one everyone's waiting for.
is Utkarsh a buy, hold or sell?
The suspense.
Join us for the final part. We'll try to answer that very question. Okay, time for the final verdict. We've covered a lot with Utkarsh Small Finance Bank.
Q2 results, their strategies, what everyone's saying.
Now the big question, the one we've all been waiting for.
The moment of truth.
Is Utkarsh Small Finance Bank a buy, a hold, or a sell?
Decision time.
But before we jump to conclusions, let's rewind.
Back to the basics.
What were those key takeaways, the things that'll help us make this call?
All right, so big picture. Utkarsh has grown a lot since their IPO.
Less than 2 years ago, right?
Yeah. We saw those jumps in profit, revenue, deposits.
And its strong capital adequacy ratio.
Showing they've got a solid base.
They're doing a lot of things right.
They are. But we also found some potential problems, things to watch out for.
Those speed bumps.
Exactly. That microfinance sector, which is a big part of their loans,
Yeah.
it's facing some headwinds.
We saw those MPA ratios creeping up.
Signaling that some borrowers might be having trouble repaying.
And we can't forget the competition.
It's heating up.
Lots of players vying for those same customers.
Utkarsh needs to stay ahead of the game. Offer something truly unique.
Keep those customers coming back. And their expansion plans.
Ambitious.
But they need to be careful not to grow too quickly.
Could stretch them too thin. It's all about balance.
Growth versus sustainability. And of course, their digital push.
Huge factor.
They need to keep investing in technology. Make things seamless for their customers.
Absolutely. So considering all this, that buy, hold, or sell decision,
Yeah.
it really depends on you, your investment style, how much risk you're comfortable with.
And whether you believe Utkarsh can deliver on those plans.
Exactly.
It's like choosing a vacation. Are you the adventurous type? Love exploring the unknown.
Or do you prefer that relaxing, predictable getaway?
Totally different experiences.
So if you're a growth-focused investor, comfortable with some risk,
Yeah.
Utkarsh might be tempting. Their track record, those ambitious plans, the digital push,
Could be a recipe for success.
they might be on the brink of something big. But if you're more cautious,
Yeah.
you might want to wait and see. How do they handle those microfinance challenges? How do they manage that rapid expansion?
Look for more proof that they're on solid ground. And if you're really worried about those risks,
You could always sell or avoid the stock completely.
it's all about what makes you comfortable.
Aligning those choices with your personal risk tolerance
Exactly. There's no right or wrong answer. Investing is personal. The best choice.
is the one that fits your goals.
Your risk tolerance, your overall financial plan.
We've given you the tools to analyze Utkarsh. Now it's up to you.
Weigh those pros and cons. Think about the potential ups and downs.
And make that call.
We hope this deep dive has been helpful, given you some insights, maybe even entertained you a bit.
Finance can be complicated, but we think everyone should understand it.
Have the confidence to make smart choices.
So keep learning, stay curious.
Don't be afraid to ask questions.
That's how we all grow.
Financially, and intellectually.
Couldn't have said it better myself.
That's it for our Utkarsh Small Finance Bank Deep Dive.
Thanks for joining us.
Until next time, happy investing.